Finances, a term that allures a lot of people out there, however, affects almost every one of them. And obviously, at some point of our life, we definitely need to learn how to manage our finances, how to manage our expenditures, and how to make a track of our investments. And here we come up with the word financial literacy. In layman language, if we talk about financial literacy, is nothing but a study of how one can manage our personal expenditures, how it can track the portfolios of the investment, and how it can budget oneself for a stable financial growth over a stipulated period of time. Financial literacy as a word might seem small, but it comprehends within itself a large number of terms. For example, stocks, mutual fund, RDs, FDs, etc. And today we are gonna give you a crisp knowledge of each of them so that you can start with your financial journey. And from now onwards, they will be in charge.
Hello, I am Dev and I am going to talk about stocks. A stock is a financial instrument that represents ownership in a company and represents a proportionate claim over its assets and earnings. Stocks are also known as shares or equity. Owners of stocks are called stockholders. Investors buy and sell stocks in the stock market. Entrepreneurs list their firms on the stock market to raise capital for meeting out their expenditure. In India, we have National Stock Exchange as the leading stock exchange. Two main stock market indices used in India are the Nifty 50 and BSE Sensex. Nifty 50 represents the weighted average of stock market indices of the top 50 companies listed on the National Stock Exchange, while the Bombay Stock Exchange Sensitive Index, also known as Sensex, represents the weighted average of stock market indices of top 30 companies listed on the Bombay Stock Exchange. From 1996 to 2021, Nifty 50 gave an average return of 11% per annum, which is considerably higher than any other investment option. Also, during that 25-year period, Nifty 50 went up by 14 times, which means if you had invested 1 lakh in 1996, it would have become 14 lakhs in 2021. Stocks beat inflation almost always in the long term, although they are associated with high volatility, which makes them risky.
Hello everyone, I'm 𝑵𝑰𝑻-𝑉 and today I'm going to talk about real estate investing. Now, real estate investing refers to the purchase of property as an investment for generating income rather than using it as a personal residence. Now, it can be understood as land, building, or infrastructure or any tangible property which is immovable but is transferable. Now, here are some points to note before you start your investments in real estate. First of all, you need a large sum of money to buy property. Besides the cost of the apartment or land, there are some other expenses like the stamp charges, registration charges, and maintenance charges which exacerbate the total cost. Third point, the appreciation in the prices may not be on the expected lines, especially in times when the economy is low. Fourth point, you must get the property evaluated in accordance with the market rates before you make any investments. Now let's come to the last point. There are some other factors such as the locality, connectivity, and infrastructure which also play a decisive role in the price appreciation of the property. Now let's talk about REITs, that is real estate investment trusts. A REIT invests fund collected from multiple stakeholders, including public and institutions, in income generating real estate properties. One can thus draw parallels between mutual funds and REITs as an entity that pools money from investors to invest in the intended asset. Now let's talk about some of the pros of REITs. REITs can be appropriate for new investors who don't have much experience about real estate and want to diversify their portfolio without a lot of risk and also without having to manage or own physical properties. Another important perk is liquidity. Like stocks, you can buy and sell real estate share on exchange. Also, many REITs are publicly traded on exchange, so they are easier to buy and sell than the traditional real estate. All the three listed REITs, Embassy, Mindspace, and Brookfield, have so far been distributing dividends and interests to their unit holders every quarter. That's all from my side. Thank you.
Hello friend, I am here to give you a brief description on mutual fund. A mutual fund is a company that pools money from many investors and invests the money in securities such as stocks, bonds and short-term debts. The combined holding of mutual funds are known as its portfolio. Investors buy shares in mutual funds. Each share represents an investor's past ownership in the fund and the income it generates. Mutual funds falls into one of the four main categories: money market funds, bond funds, stock funds, and target date funds. Each type of funds have different features, risks, and rewards. All funds carry some level of risk. With mutual fund, you may lose some or all money you invest because the securities held by fund can go down in value. A fund's past performance is not important as you might think because past performance does not predict the future return, but past performance can tell you how volatile or unstable a fund has been over a past period of a time. The more volatile the fund, the higher the investment risk. Mutual funds are subject to market risk. Read all scheme related documents before investing. Thank you.
Hello, I'm Bhagyashali and today I'm going to talk about gold investing. At first, what gold investment is. As the name suggests, investing in different forms of gold. It can be in the form of physical gold or stock of gold mining companies. There are many benefits of investing in gold, like it has long-term store value, inflation hedge, liquidity. No specialized knowledge is required, and it helps you to diverse your investment portfolio and many more. And let us now discuss about different ways of investing gold. And the first one is digital gold. One of the most convenient and cost efficient way to invest your gold online is digital gold. You can invest small amounts with maximum security. It liquidates within 2 days with zero making charges. You can view your gold online and can convert it to physical gold. And the second one is gold coins or bars. Since these gold coins or bars doesn't require any artistry skills, so making charges are not applicable and you don't have to pay any tax until you sell it. And the third one is ETFs, that is gold exchange trader funds that allow you to trade units on stock exchange. And the fourth one is gold mutual funds. They usually invest on stock mining companies, physical gold, and stock gold production and distribution syndicate. If you're thinking to include gold as an asset in your investment portfolio, then I hope this was helpful for you to have a better grip over gold investment.
Hello, I am 𝑵𝑰𝑻-𝑚ishra and today I am going to talk about the crypto. A cryptocurrency or a crypto is a digital currency designed to work as a medium of exchange through a computer network that is not reliant on any central authority such as government or bank to uphold or maintain it. There are tens of thousands of cryptocurrencies available today with the figure pegged somewhere around 10,000 in 2022. Major cryptocurrencies include like Bitcoin, altcoin, which are just a alternative of Bitcoin like Ethereum, Dogecoin, etc. And there are crypto tokens too. If you talk about should you invest in cryptocurrency, then there are many advantages and disadvantages regarding this. The advantages like they are private and secure, they are decentralized and they are transparent. Also, they are hedge against the inflation. On the other hand, if you talk about disadvantages, they are not widely understood. They are prone to high risk. Scalability is a problem. Their legality is debatable in many countries like in India. Also, if you talk about the scene of cryptocurrency in India, then in India it's not completely legal. Also, according to the Union Budget of 2022, the government of India has laid down 30% tax on the transfer of virtual digit assets. Also, they are planning to make their own cryptocurrency under the inspection of RBI. Thanks.
Hello everyone, in this video I'll be telling you about National Pension Scheme. It is a government sponsored pension scheme which was launched by Government of India in January 2004. Earlier it was only for government employees, but in 2009 it was opened for all sections. This scheme allows subscribers to contribute regularly in a pension account during their working life, and on retirement subscribers can withdraw a part of the total income, and the rest part of the total income will be used to buy some annuity which will secure a regular income after their retirement. Now you'll be wondering who can join National Pension Scheme. Any Indian citizen between the age of 18 and 60 can join NPS. Only condition is that they must comply with the KYC norms. We cannot have more than one NPS account. Also, there is no need to have more than one NPS account as these accounts are portable across sectors and locations. NPS has a provision to contribute a minimum of rupees 6,000 every financial year. If we do not contribute this minimum amount every year, our account will be frozen. But we have not to worry about it because we can unfreeze our account just by visiting POP centers and pay the minimum required amount, and with a penalty of rupees 100, we can unfreeze our accounts. The money invested in NPS is managed by PFRDA registered pension fund managers. At the moment, there are 8 pension fund managers, namely ICICI Prudential, LIC Pension, Kotak Mahindra, Reliance Capital, SBI Pension Fund, UTI Retirement Solutions, SDFC Pension Management Company, and DSP BlackRock Pension Fund Managers. NPS offers 2 investment choices. First, active choice. This option allows the investor to decide how the money should be invested in different assets. Second, auto choice or life cycle fund. This is the default option which invests money automatically in line with the age of the subscriber. Now, this was all about National Pension Scheme. Hope you all have something.
Hello, I'm 𝑵𝑰𝑻 and today I'm going to tell you about recurring deposit (RD). Indian banks offer a wide range of investment options to the citizens of India. Fixed deposit and recurring deposits are the most popular. These options are preferred mostly by the people who are salaried and do not want to take any risk with their investments. For an RD investment, one has to invest a fixed amount of money every month for a predetermined amount of time. The amount invested will then be returned along with the principal and an interest at the end of the tenure of the RD. Now, there are various advantages to this RD. Investing in an RD scheme is a great option for salaried employees, as they do not have to invest a lump sum amount just like they have to do in an FD. Moreover, the investor needs to invest only a part of their income every month, the amount of which is predetermined by the investor himself. The other advantage being the principal amount along with the interest will be returned at the time of maturity of an RD. This amount can be used for short-term financing situations like going on vacations, marriages, short-term expenses, even for the education of the kids. Thank you.
Myself Gurf, and today's topic is bond investment. A bond is a debt security. Borrowers issue bond to raise money from investors willing to lend them money for a certain amount of time. Bonds have maturity date at which point the principal amount must be paid back in full or risk default. The issuers of these bonds are primarily government and corporations. Government need to fund roads, schools, dams, or other infrastructural projects. Bonds allow many individual investors to act as lenders. Moreover, markets allow these lenders to sell their bonds to other investors or to buy these bonds from other individuals as well. These bonds are associated with a lot of risks. The first risk being inflation risk, the next being the problem of liquidity and frauds as well.
Hello, my name is Singh, and today I am going to tell you about PPF, Public Provident Fund. We all have heard that PF is deducted from our salary. The amount which is deducted comes under EPF, known as Employee Provident Fund and commonly known as PF. The PPF was started in 1968 by Financial Ministry's National Saving Institute to help individuals save small amount and with the returns with almost zero risk. The login period of PPF is 15 years and you can extend up to 5 years after the completion of this 15 years. The interest of PPF varies from 0.69% to up to 8%. The interest is decided annually, and this year the interest is 7.1%. The minimum amount required is 500 per annum to invest, and up to you can invest 1.5 lakh. You can invest more, but the interest is only given up to 1.5 lakh. And the eligibility is you must be a citizen of India. You cannot hold more than 2 PPF account. You can open this account in any bank or nearby post office. The benefits of PPF account is it's come under a TC section of income tax, which is triple E category, exempt category, which means the amount you invest and the interest you get when you withdraw the money. There is no tax taken on that money. Plus, you can get tax benefits on your income tax returns up to 1.5 lakh due to this PPF account, and you can also take a loan on PPF account. Thank you.
Hello everyone, I'm Dhairya and today I'm here to talk about NFTs. NFT stands for non-fungible token. Non-fungible more or less means that it's unique and can't be replaced with something else. For example, a Bitcoin is fungible. Trade one for another Bitcoin and you will have exactly the same thing. But a one-of-a-kind trading card, however, is non-fungible. At a very high level, most NFTs are part of the Ethereum blockchain. Ethereum is a cryptocurrency like Bitcoin or Dogecoin, but its blockchain also supports these NFTs, which throw extra information that makes them work differently from, say, an Ethereum coin. It is worth noting that other blockchains can implement their own version of NFTs. NFTs can really be anything digital, such as drawings, music, or even your brain downloaded and turned into an AI. But a lot of the current excitement is around using the tech to sell digital art. A lot of artists are now selling their artworks as NFTs. There are many platforms like Maker's Place where you can buy and sell art pieces as NFTs. But you can copy a digital file as many times as you want, including the ask that including with an NFT. This is where things get awkward. NFTs are designed to give you something that can't be copied, for example, the ownership of the work. To put it in terms of physical art collecting, anyone can buy a Monet print, but only one person can own the original. Big brands and celebrities like Marvel and Wayne Gretzky have launched their own NFTs, which were aimed more at traditional collectors. With the entry of such big brands, we can say that NFTs could become mainstream in the near future. Thank you.
Hello everyone, my name is Rishti Agarwal and today I'll put some insights on the topic fixed deposits or FD. Fixed deposits are the investment instruments offered by banking and non-banking companies where you can deposit your money at a higher rate of interest. You can deposit a lump sum of money for a specific period which varies from user to user. Once your money is invested with a reliable financer, you start earning an interest on it based on the duration of your deposit. Usually, the defining criteria for fixed deposit is for the particular period of time, but you can withdraw your money with a penalty.
And with the completion of the previous segment, we are on the verge of concluding this video. I hope you loved the explanation and our presentation regarding what financial literacy is, and you have certain knowledge what it comprises of. But since failure is not fatal, this video was not all. There is still a lot and lots of knowledge to be gained in the world of finance. This was just a drop. There is an ocean yet to discover. And I also wish that this video proves to be a kickstart and a stepping stone in your life, in your journey towards achieving that freedom in the financial sector and that financial stability. This was Bhatik Patel and this was all. Thank you and have a nice day.